Can you see that?
Yep. Perfect.
Terrific.
Perfect. 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 All right. We'll get some people following the room here. We'll start here in a minute, guys. Um, thanks for guys for coming out today. This is one of these opportunities that I find that, you know, I met Harry on a cold call, put it that way. He called me a few months ago and brought this to my attention, something I didn't know anything about. And I immediately thought this needs to be put in front of as many agents I can put them in front of because it's a awesome opportunity to do both a lot of life insurance sales and more importantly help a lot of families. You guys know that I love helping families first, and making money is always secondary. This is one of those opportunities where you can do I was talking to one of my agents, Kevin, this morning, and he couldn't make the call today. He had some other things going on. But one thing he told me, and you guys know Kevin, he's a paramedic, he's a firefighter down in Florida, and his thing, he said, Jeremy, this is one of the most rewarding sales you can help a family do, and he's really right because this is something you're helping a family with a huge need and a huge want at the same time. So let me introduce to the special needs market, the special needs task force, Mr. Harry Ehrenberg. Harry's a parent of special needs child. He's for over 30 years. He's been working with parents of children who have disabilities, helping them arrange the estates to provide for the children's financial security and assure the quality of quality of the child's life. He's also lobbied at both the state and federal level on behalf of these families. He's been an external faculty member of the American College, served as an advisor to the Uniform Law Commission Periodic Payment of Judgment Committee. He has financial articles published in legal and medical publications, and was featured in the book about Little Rock, One from the Heart. Harry is the owner of the Special Needs Task Force and Ehrenberg Financial. He's been in the business since I think 1998 is what it says here, or dated back to 1898.
The business goes back to 88. Yeah.
80, okay,
19,
perfect.
1898.
All right.
Obviously, that was my great grandfather.
Yeah.
Okay.
Okay. Like, I know you're not that old.
I just feel it sometimes.
Sometimes, yeah. And he's also a CLU. So I'll let Harry take over and explain what he does and how he helps folks. Because again, guys, pay attention. And if you have questions, please unmute, stop, ask, put them in the chat, and we'll ask them as we go. So Harry, floor is yours.
Jeremy, I appreciate it. Obviously, I'm very close to this market because I'm a parent of a child with special needs. So this is a stump the chump format with me as the chump. So if you have a question, please go ahead and don't hesitate to ask it. If you don't, we're going to be finished relatively quickly. Basically, I think everyone knows someone who has a child, and maybe it's someone in your family that's on the autism spectrum, or the child has Down syndrome or cerebral palsy, something like that. That's what we're referring to. We're not referring to somebody who was in special ed because they were dyslexic. Okay, or some people, these kids when they grow up or they're adults now, most of the ones we work with are over the age of 18. They're always going to need help. They're never going to be completely independent. They may come a little close, but they're always going to need some help. And so to get an appreciation for how large this market is and what it means to you, as you think of your book of business, if you just want to take a second, if you have a calculator, a pen, pencil, whatever, it's going to be about 5% of the families are going to have a child with special needs. So what's 5% of your book? How many people are we talking about? How many families? Multiply that by whatever commission you're going to make on a permanent life insurance plan with like a $3,600 a year premium. That'll tell you what your book is worth as far as the special needs market. Now, outside of that book, when you look at, or it's in your book, but it's people, it's not their child, but it's another family member, maybe their sibling or a grandchild, whatever, that can range up to like 15% of your book. It's a pretty big number, and it's worth going after. Now, and this is not a complicated market. It's a relatively simple market. You know, if you can figure out final expense or mortgage protection, you can figure this market out. It is nowhere near as complicated as selling Medicare Advantage plan, for heaven's sakes. Okay. I've been in business for over 50 years, and I'm not even tackling that one myself. So it is not a complicated market. Now, Jeremy talks a lot about asking questions. The key in selling insurance is asking questions. This is the question that it comes down to for parents. It's the one I still ask myself, and I've done everything I can for my son. My son on the autism spectrum, his name is Morris, affectionately known as Mo or Momo. Occasionally I'll refer to him. I have another child, a daughter, Catherine. Sometimes refer to her as Cat. And I'm telling you this as a parent. We lay awake at night wondering what's going to happen to our child when age catches up to us and we can't take care of them, or if we become disabled, or if we die. And the second thing that keeps us up is, how can we leave them anything without disqualifying them from government benefits? It is a big deal. If your prospect, if your policyholder answers yes to that, then everything else typically is going to fall in place. Okay. I'm saying this from experience of working with parents, and I'm saying it as a parent. We are looking for someone who understands our situation and can help us solve this problem. It is a priority for us. And because it is, we will follow an advisor's advice, and it will be a very short sales cycle. One reason is if you have a child with special needs, it takes up a tremendous amount of time. And you just don't have time. There's a limited amount of time. We're concerned. There's a limited amount of time we have to deal with this issue, because when we solve it, there's going to be something else for us to take care of. That is the life that we live. It's that simple. If you don't have a child with special needs or have one in your family, you may want to talk to somebody who does to get a feel of what it's like for the parents. You're not going to be intrusive. Just tell them what you're doing. Ask them to take you under wing. They will introduce you to other parents. They're exceptionally good about that. And they will introduce you to organizations that provide services. And those organizations are typically, they typically employ people who are very compassionate, and they're great. They're a great source of referrals. Okay. So this is the technical part of the special needs market. If you understand this, you're over the hurdle. If I go too fast, stop me, slow me down. I make this presentation to parents every day, 2-3 times a day. Okay. But if we know where a person's child is in these quadrants, we know what to do. So on the left-hand side, in the purple, those are monthly disability income benefits, either Social Security disability or SSI. On the right is health insurance, Medicare and Medicaid. What happens on the left affects what happens on the right. So if you pick up Social Security, you'll pick up Medicare. If you get SSI, you'll get Medicaid. Those two lower ones, the SSI and Medicaid, you must be impoverished to receive them. And Medicaid is the most important benefit because it pays for things that no other health insurance is going to pay for. Okay? It literally, in some cases, is a matter of life and death to keeping your kids alive. Okay? The worst thing about this market is that you're going to have a higher mortality rate among young people. Okay? And you have parents who put everything in their life into taking care of their child, and mortality catches up with them. It will happen more often. It's not daily, but more often than not, or it'll happen just more than you normally see. This year, to be impoverished, there are two tests. One is, what is that child's income? This year, it can be more than $967 a month. That is the amount of SSI. Some of these folks, they'll have a little job. It will reduce the SSI. And you have to make certain that's managed. That's for the parents. this is just for you to know, that they're working with the employer to know that they've got to keep their child under that $967 a month. The other limit is $2,000, and this is the one that creates the real problem. Our kids can't have more than $2,000 and receive Medicaid. Now, there are a few exceptions. You can prepay a funeral, which means you folks can sell them some type of final expense, set it up properly with some type of Medicaid restriction on it. They can own a car, they can own a house, they can have something called an able account. Everything else counts against them. So that's the problem. Mo can't live on $967 a month. I can't leave him more than $2,000. What's the solution? And there is only one legal solution, and that's establishing a special needs trust. So there are no options. If there were options, there'd be another alternative. It's not out there. At least there's no other legal alternatives. And it is not unusual for parents who don't know about this, it's not taught in school, to walk into this quagmire. I'll get to that in a minute. Okay. So there are two types of special needs trust. The one that the parents will be setting up is called a third-party special needs trust. It is one that's funded by someone other than the person with a disability. Typically, it's a parent, but it can be anybody. Working with a family now where it's going to be the grandmother. She's got the money. She's more than happy to start funding that trust. Okay? It is not counted against the $2,000 limit. The money in that trust is used for supplemental purposes. It's not to supplant government benefits, but to supplement them. Typically, it's not going to pay for the necessities. We expect that to come out of SSI, so it's not going to pay for food, clothing, and shelter. There are other ways that we can work with that. There's something called an able account that a trust can fund that'll pay for the clothes, the food, and the shelter. Okay? There's no minimum contribution. There's no maximum contribution. At the death of the person the trust was set up for, the person with a disability, pay their final expenses. Then you're going to distribute whatever's left in there, very similar to a life insurance beneficiary designation. Okay? Someone's going to get the money. If the parents don't set this up, you're going to end up using a first-party trust. I don't want to spend a lot of time on it unless someone just really wants to. If the parents don't set this thing up and their child gets something, then we'll come back in and do a first-party trust. The problem is, at that child's death, the state gets repaid for anything Medicaid is paid, which can leave nothing for the family. Okay? So this is the problem that we see, that we deal with a lot. Parents didn't know any better. So instead of leaving Mo's money into a special needs trust, I would have left it to Catherine, his sister, to Kat. Okay? So what's the problem with that? Well, who's going to pay money on whatever Mo's inheritance that Catherine's holding earns? And it's going to be Catherine. You know? And what happened? I mean, look, Catherine's a good driver, but we have ice on the streets maybe a couple of times a year. And it's very easy to do more damage than your insurance is going to pay for. So what happens to Mo's money in that case? What happens to it at Catherine's death? What happens if she's adverse with the IRS? What happens if she gets a divorce? I mean, most folks are going to say it's marital property. I've had a few divorce attorneys, and I work with a lot of attorneys. And all of my background, I've been in insurance business. Most of it actually did with something called forensic economics. I'm the guy who would come into court, testify about how much money it took to replace someone's lost income, who had been killed or disabled, or pay their future medicals, or a business deal didn't work. You know, so I've seen a lot of litigation. I've seen people blow through their policy limits and have to use their personal assets to settle cases. What happens if it gets divorced? Some of the divorce attorneys tell me they think they can protect it, called the constructive trust. The only problem is the last thing you see, that what happens if DHS, which is typically the state organization that administers Medicaid, if they find out about it, it's the end of the world. Okay? Because this money is not disclosed to the state. We've had situations when the state did find out about it, they cut benefits immediately, and they're going to cut them until you repay them. And they're never going to have enough money to repay them. We had a young woman in Ohio. For years, family and friends helped her. And there's nothing really insidious about that. It's rather noble that they helped her. But when the state of Ohio found out about it, they said if we had known about it, you wouldn't have qualified for Medicaid. So we're going to stop your Medicaid, and we can pay us back what we paid Medicaid benefits for you. We'll start your Medicaid again. Well, it was like 200 grand. Well, that poor woman's never going to see 200 grand in her life. And like I say, there's nothing insidious about it. They just didn't understand how the system works and how they could have navigated around that to keep this thing legal. So that's the dilemma. Okay. The other part of that dilemma is most people don't do their estate planning. Depending on whose numbers you look at, 50% to 2/3 of the folks die without a will. And the problem in our market is, if you don't have a will, the state's going to have one for you. You die intestate. And so that child with a disability is going to inherit. But it may not just be they're going to inherit from their parents. In some cases, depending upon who's left alive in the family, they're going to inherit from their grandparents. They may inherit from a sibling. They could inherit from an aunt or an uncle. Okay? So, you need to help people just simply get their financial house in order. You do that anyway. Part of that is making certain that they either have wills or trusts, whatever is most appropriate for them. Okay? Now, the other issue, and the other one's overlooked, this is more so, is who's going to take care of this child when you're no longer around, if you're the parent? Who's going to be the successor caregiver? And what we have done with the task force is we've invented something called a caregiver trust. And it pays for items that a special needs trust can't pay for, and it helps us to attract and retain successor caregivers. So for instance, if we'd been Mo's successor, if he wanted our child, if he had been my sister Terry's child, and something happened to Terry and Ken, we ended up with Mo. Catherine is there with us already. There are times it takes so much to take care of Mo. He's on the autism spectrum, does something called melting down. Catherine got pushed aside. It meant that she didn't always make it to soccer practice or a piano lesson, or I didn't have time to tutor in math. If we had had a caregiver trust, it could have paid for those things. It could have paid to make certain that she got to the soccer practice, piano lesson, hire a tutor. In the summer, get her out of the house altogether, get her some respite care, send her to summer camp. It can pay for respite care for the entire family. I mean, the special needs trust can pay for one person, but it can't pay for the entire family. So you need a way to build in some time for the family to catch their breath. And so that's what the caregiver trust does. Now, this is how we have designed our trust package. It's unusual. We're the only ones with it. It's designed for middle America. Yeah, we have a special needs trust. That's the blue trust. The yellow is the caregiver trust. We have a spendthrift trust. This is for folks who have a disabled family member, but they're not on Medicaid. Maybe they got disabled later in their life. Who knows? Maybe they lost their eligibility. We are going to see that because under recent federal legislation, they're going to try to reduce the Medicaid rolls. So if they lose that eligibility, a spendthrift trust, a special needs trust is not appropriate. A spendthrift trust is. So we have this green legacy trust, so that's the one that gets funded. For most families, it's going to be funded at the parent's death. Sometimes they'll fund it beforehand. Like I say, our focus is middle America. So the money stays in that green legacy trust. That's where it's invested, and then distributes down to those other trusts as needed. So if someone loses their eligibility for SSI, it's just very simple to shift and take care of them out of the spendthrift trust. Or if they regain eligibility, go back to the special needs trust. And sometimes they may need that caregiver trust funded quite a bit, and sometimes they're not going to fund it at all. I can tell you now, no one knows today how we should allocate an inheritance for someone who has a 30, 40, 50-year life expectancy. With our system, you don't have to. Everything goes with the green legacy trust. Make sense? Any questions?
Guys, you got some time. Ask questions if you have them. This is the time to ask.
If somebody, say for instance, a parent doesn't have legal documentation, but their children does, is still applicable in the situation, Or
What
is
do you mean
there
they don't
any,
have legal documentation?
like they don't have a social security number? The parents
Um,
don't, but the child does. But
yeah,
is
oh yeah,
there,
no, yeah. If the child is, yeah, if the child has a social security number, most likely they're going to be on benefits. So yeah, it's very applicable.
okay, so then
Although,
the issue with the parents isn't a problem.
I'm sorry, what?
Sorry, the issue with the parents not having a legal citizenship isn't a problem.
No, if their child is on benefits, well, even if their child's not on benefits, someone needs to be able to take care of that child. They needed some way to leave money and inheritance for that child. So depending upon whether the child's on benefits or not, if they are, we would take care of them out of the special needs trust. And if they're not on benefits, we'll take care of them out of the spendthrift trust.
Okay, and what if the child does not have any legal citizenship? For instance,
Again, there are some folks here without legal citizenship that are on benefits. If they are not on benefits, we'll take care of them through the spendthrift trust. Okay.
oh, okay.
So citizenship really doesn't enter in right now. And apparently it's not going to in the foreseeable future. Um, when we established the task force, I established it. An attorney, Margaret Ward, is a state planning attorney, also has a son on the autism spectrum. We did it because we had a lot of the middle America who could not afford a $2,000 or $3,000, in some case $7,500 legal fee to just do a special needs trust. So we put this trust package together. It costs $750. It covers all 4 trusts. It's a one-time charge. They need to. With PayPal, they can pay us over 3 months. And so that's sort of our unique selling position, is that we solved a major problem for parents, and that is they couldn't afford the legal expenses. $750, most of middle America can afford. And like I said, if they have to, they can pay us over 3 months. So, any other questions? Otherwise, I was going to continue.
Does
I
it
have a
matter
question.
what
I have a
state they're in?
question.
What we had two one. The one who said this matters. No, our trusts are good anywhere the American flag flies, including outside the United States. So if you're on a military facility in Guam and you have a child on Medicaid, we're good. I just got through making a presentation for families at the local air base. And somebody else had another question.
Yes, I have a question. Are you familiar with California?
Yeah,
So in California, we have look back rules for Medicaid.
right,
I'm talking about something a little different. This is for seniors who are going
right.
into
Yeah,
facilities.
we're not working that
Um,
market. That's not us.
okay, you don't know that market.
Well, it's not that I'm familiar with look back. The point is, we focus strictly on folks who are typically already on SSI and Medicaid, so there's not a look back issue. Okay,
I see. Okay.
the look back is where you're going to see and dealing with my own family uh, uh, is where they didn't do any planning. One of the spouses needs is starting to enter into dementia. How to protect assets for the community spouse. That's really not part of our market. Okay.
Do you know anybody who deals with that?
If you need to find someone, I would go on the internet and look for the elder law attorney academy, National Association of Elder Law Attorneys.
Elder law.
Yeah, elder law attorneys. They were one of the key players in 1993 that got the legislation passed on special needs trust, but the other issues for seniors. Real familiar with them. My ex was their state representative here in Arkansas. At one point, I was fairly politically active, and one of the things I did was work with the staff of the U.S. Senate Finance Committee on this legislation. So, National Academy of Elder Law Attorneys is where I'd start if you're looking for someone to work you through on that.
When
Okay.
you say that they have classes, what is their
No, no,
uh
no, no, no.
you said there's an academy of some sort?
Well, that's their name. Okay. It's strictly an organization for attorneys If you want to find an attorney who understands the issue when you're dealing with someone who's elderly and they're going to go into a nursing home and you're trying to preserve assets, I would look to them. They understand it.
Okay, thank you.
You're welcome. Any other questions? Okay. So what's used to fund these trusts? Well, candidly, you can use anything a trustee will accept. But the reality is life insurance is the number one funding vehicle. Nothing else is remotely close, and about everything else creates problems. The reason is this. For middle America, most of what they own a home, they have a retirement account, 401k, IRA, 403b, and they have some life insurance. Okay. If you want to leave the home into the trust, you've got to have enough money to maintain that house. And you may not want to leave it into the trust because their child can own it outside of the trust. And if anybody ever gets hurt in that house, if it's outside the trust, they can't get to whatever money's left inside the trust. Qualified money, IRAs, 401ks, 403bs, their savings plans, those are going to end up as inherited IRAs. And so you're going to have to do a distribution every year. You can't send that distribution out of the trust to the person with a disability because of the $2,000 rule or the income rule. You can disqualify them. So it has to stay in the trust. These, by law, are irrevocable trusts. They're going to hit the maximum tax bracket quicker than anything else. So that's going to put them up to the 37% federal bracket. If you're in a state with taxes, it's easy to be 41, 42% or higher. So what you might want to do is, if you know somebody has qualified money, is you may want to do a Roth conversion. Okay. Otherwise, qualified money, you can leave it. Understand it's going to have the daylight speed out of it for taxes. Make sense, folks? Mm-hmm. Okay. Okay. Typically, what we're seeing to fund these trusts is somewhere between about $250,000 and $1 million. I don't want to drag this thing out. We do have a 4-step process to determine how much money is needed to fund the trust. It is, that's the range. And candidly, the ones I've been involved with, we hit when it was $1 million, it was $1 million. That was the amount of insurance we sold. It was just that simple. It's just the nature of the market. Again, it's for middle America. They've been pretty much ignored by the financial service industry, and really in this market, it is an exceptionally short sales cycle. And the reason is this, and I'm telling you this as a parent. We've got more things on our plate than we can take care of. And as soon as we take care of this, there's going to be something else. So we don't have a lot of time. Just don't have it. The parents you work with are very appreciative, and they'll make referrals, and they'll give you an introduction. Because candidly, that's the way most parents learn about this stuff, is through other parents or an organization that's providing services. And if you're looking to solve a prospecting problem, this market will keep you busy. This is where I would start if I were you. First, begin with your book of business. Let them know that you understand the special needs market. And let me say this, where we come into it, we will take part in calls with you. What we want to do is provide the trust. Okay? We don't split commissions. The commissions are yours. Okay? I know there's some systems out there in other markets where there's a split. We're not splitting commissions. It's yours. Take it. God bless you. We will set the sale up for you, because we're initially going to talk about the parents are concerned what's going to happen with their child when the parent gets too old and how to leave an inheritance. We walk them through that quadrant diagram I had. We show them the 4 trust package, and that's pretty much the sale for that. That most of them, they understand it, they get it, they're going to commit to doing the trust. and it's just a very simple transition. I'm going to say it doesn't make any sense to set this trust up if you don't fund it. How are you going to fund it? Typically, it's going to be at death, and they're going to tell you everything they got. Okay, you'll probably discover some assets out there that you didn't know they had. Okay, and you're off and running. The other thing is special ed departments at schools and possibly, particularly in larger metropolitan areas, you will actually have special ed schools, private special ed schools. Okay, you're going to have. There are just a ton of organizations that provide services. If you're familiar with Easter Seals, that's the best example. Those organizations, most of those who work for those organizations are very compassionate. They view themselves as a resource for those families. They will introduce you to them. Typically, when I do seminars, they're one thing is I have not done a seminar that I promoted, and I don't know when. Either the school, the special ed department set it up, or someone like Easter Seal set it up. They send out the invitation. You do it at their facility, and typically they even provide the refreshments. You show up. This is not a deal where you're spending $5,000 for a dinner seminar and you end up with plate lickers. That's not this market. Okay. Parent support groups. I used to do a lot of parent support groups. Candidly, they come and go. They're typically volunteer organizations. And the other thing is churches and synagogues. We have great results there, particularly larger ones because they'll have a special needs ministry. Or smaller churches will go in with neighboring churches to pull together a group for you. So they're out there, and typically these people want to help. So again, you're working with families who are anxious to meet with you, and it is not a typical sale where you have to develop the need and then come up with a solution. Okay. The families know they have a problem. They're looking for leadership. Implement your recommendations. It is sort of like this, something that happened to me in another setting. On Labor Day in 2016, I wasn't feeling well. I had some chest pains. My wife finally convinced me to go to the heart hospital. You go to the ER, you're in one of those little rooms. You've seen it on the TV or the movies where they're hooking you up to everything in the world and doing EKGs, except it's the real deal. They're doing it on you. And then some doctor walks in he's never laid eyes on and says, Mr. Ehrenberg, I need to do a heart cath. And while I'm in there, if you need it, I'll put a stent in. I mean, what am I going to say? Gee, doc, that's a big decision. I want to think about it. I want to go home and get a second opinion. That doesn't happen. If it did, what's the doctor going to say? I understand, Mr. Ehrenberg. I don't want to be intrusive. I'll tell you what, if I hadn't heard from you in a week, I'll call you. If you're still alive, we'll talk about it. That doesn't happen, okay? Not in this market. The parents want leadership. Provide them leadership, okay? They explain, or I'll be there with you. They know they need the special needs. They know they've got to take care of the child. They don't know how to do it. Once they understand the special needs trust is the solution, they're going to do it, okay? And they know they got to fund it. And they're going to make certain that life insurance doesn't lapse. I am hard pressed to think the last time one of these policies lapsed. It's just too important. If you have questions, give me a holler.
Yeah, we have a couple of questions coming through real quick.
Okay, fire away.
So when you're funding these trusts, what kind of policies are you typically wanting to insert in these trusts? More of the GUL, or you're looking more second to die policies or term? What typically is a funding opportunity?
Virtually no term, because this is a permanent problem. Yeah, term if it's a younger family. Let me say this. Most younger families are not going to implement because, and this is from experience, it may take a while to get a diagnosis on your child. You're trying to get them educated. You're trying to find what programs are available, what benefits are available. For some families, you're trying to keep your child out of the criminal justice system. Okay? I mean, I have one family, their child is in the forensic unit of the state hospital for murder. He's never coming out. If he did, it meant he's sane. and he has a death penalty hanging over it. Okay, you're going to run across parents that have a kid who's on the sexual predator list. It's just okay. About the time the child is getting ready to leave high school, and in most states you can stay to like age 21, 22, then the parents are starting to get serious. Okay. And so the conversion ratio is going to be much higher. And the older the parent is, the higher it gets. By the time the parents are in their 50s and 60s, they've seen enough of life. Okay. They understand that, yeah, people die. Okay. They get disabled. They've got to make some decisions. Okay. So, I forgot. What was the question? That guy's talking.
What policies do we typically sell? So it's
that's why we don't do a lot
policy.
of term unless they're real young. A lot of GUL, a lot of hybrid GUL, because understand long-term care hits us harder as parents than typical. Okay, because we need to have an estate to fund these trusts. So either you're going to make the trust the owner of the policy and beneficiary and get out of the parent's estate, or a lot of times since it can be funded at the death of the second parent. And let's face it, most folks are underinsured. The surviving spouse is going to need that coverage, and they may also need that long-term care benefit. And so it's going to be something that's permanent.
Yep.
Candidly, I've got a case where we're really going to go the other direction. We're going to go with an IUL because, quite frankly, the surviving mother can afford it. And we're going to create like a private pension plan, a supplemental, where you float the money out through loans. That's not to take care of the mom. That's so when mom gets older, she's going to use that money to hire someone to take her place. Okay? That happens. Okay? So you're also going to see a lot of annuity sales. If they have qualified money, two bites of the apple. First one is we see a lot of what I call orphan 401k accounts. Some will have an account at an employer that they used to work at, and that money's just sitting there. It's not being managed. For heaven's sakes, bring in house. An annuity is a great solution. The other thing is, if it's qualified money, I can't say you need to do a Roth conversion on all of them, but you need to look at a Roth conversion on all of them. Because if you put a Roth IRA into a special needs trust, that is a wonderful investment because you're over the tax hurdle. So it's the complete opposite if it's a traditional IRA. Okay. So we're looking for permanent insurance in virtually every case. A lot of folks think, gosh, second to die, that's the product. We sell very little second to die survivorship. One thing is that the death of the first parent, the surviving parent, is going to need that death benefit quite often. If you're just going to fund it, if the trust is going to own the life insurance contract, yes, survivor contract makes a lot more sense, higher probability. We just don't see a lot of it.
Okay. Another question. Any way we can use this in Canada? This marketing. I can massage the message to apply to Canada if I have the basis. So can this be done in Canada with the same kind of program or no?
Well, we could. Now, the thing is, I don't know how their benefits work, whether they have to be impoverished, but if they don't, then what we'll do is we just simply operate out of the spendthrift trust. But because the problem is the same. We're going to supplement our kids. We need to leave them something. How do we leave it to them most efficiently? It's going to be in a trust. The question is it going to be a special needs trust or a spendthrift trust? In either case, it's going to be a trust. So if Canada doesn't require someone to be impoverished, we'll just operate out of the spendthrift trust.
Okay.
Okay.
So who is the trustee of these trusts?
Good question. Typically, even though the trust is not funded until the parent's death, the parents are the initial trustees because somebody may want to do something for their child. And it's sort of like a no harm, no foul. If it doesn't get funded at the parent's death, okay, so what? Until it gets funded, you don't have to have a taxpayer ID number. You don't have any expenses. The question becomes who is going to be the successor trustee. And even if you can do this for an initial trustee, if it is going to be funded, you have two choices. You can do a individual, a family member, as a successor trustee, see a lot of siblings, or you can use a trust company or the trust department of a bank. We've had a number of banks look at our documents and they are willing to administer them. Okay. I will say this, if you go with a corporate trustee, a bank trust department, or just a trust company, they're most likely going to have minimums. And gosh, I'm trying to think I think we talked to AG Edwards, they had $1 million minimum. Okay. Well, that's pretty high in this market. Yeah, we hit it occasionally, but that's not an everyday occurrence. In our task force, we do have a trust department at a bank that will take some. Look, I mean, they took a $70,000 account the other day. The reason is the chief operating officer of the bank that the trust department's part of has a child on the autism spectrum. They're part of our task force. So if they need to, and they can operate anywhere in the country. So we can go with a corporate trustee, we can go with family members. As long as the people who establish the trust is alive, and that's called a grantor, they can name successor trustees. And they can give that authority to somebody else with our document. Whoever the last name trustee can do it. One way or another, we're going to have a trustee in our trust. But you bring up a good point. Let me expand on it a little bit. There are basically only 4 sets of information we need to establish a trust. It is exceptionally simple. Who's going to establish it? That's called a grantor. Well, you're going to be talking to them. It's the parent, most likely. Who's the trust for? It's called the trust beneficiary. It's their child. So the four people identify, or 4 entities, you got half of them are there. Who's going to be the trustee? Typically, the parents are going to start off. It may take a while for them to determine who's going to be their successor. And the last thing is who gets whatever's left in the trust at their child's death. What we suggest is that we either have it the parent if the parent outlives their child, or the parent's estate. That way, as long as the parent is alive, through their will, they can determine where that money goes, because it'll flow back into their estate, which means you don't have to amend the trust. It's an irrevocable trust by law, which means it's not easy to amend and expensive. If all you have to do is just do a costly will, that's pretty simple to do and not expensive. So those are the 4 basic sets of folks we need to know. And the only things we want to know about them is their street address, email address, and phone number. We do not want Social Security numbers. We don't need them. If they want to name somebody to name successor trustees, they can do that. That's an optional. That'd be the first thing. And if they're using a corporate trustee, they can name someone to advise them on distributions to keep a family feel. So this is not difficult to do. It's relatively simple. And not that we would want to even do it every time, but these folks' backs were up against the wall and we got it done in like 13 minutes to gather the information. So we gather it. We've really modeled it after a concept from the insurance industry where if you wanted to put it in a pension plan or a profit sharing plan, they had something called a joinder agreement. And it would be a book and you'd fill it out and it's kind of vesting schedules and eligibility schedules and one thing or another. So we call our document a joinder agreement. It has those 6 areas in there. Who's the grantor? Who's the beneficiary? Who's the trustee? Who's the remainder person? And then the 2 optional. Do you want to name someone to name successor trustees? And do you want to have someone advise the trustee on distribution? That's the joinder agreement. We complete it. They need to sign it. We email it to them. They need to sign it in front of a notary. We'll send them an invoice. Then they send us back the signature pages. I mean, we've got the original documents. Our attorney completes the trust documents. Typically, it'll have them to them in a week. And they go through the same signature process in front of a notary, send back a signature page. The trustee will send back a certification of trust. That's it. They're done. This is not a long, drawn out process. You can start funding that trust on the first interview. It's just not that complicated, folks. It's just not. We're going to talk about life insurance, most likely. And there's, I mean, look, I've been with agents. I mean, they're running illustrations and they're taking applications. You can't name the trust as the owner or the beneficiary because it doesn't exist yet. Okay, so the parents will still own it. They'll name a beneficiary when we get the trust up and running. The policy is issued. We'll do a change of ownership, a change of beneficiary. No big deal. Okay, That's it. Anything else?
Yeah. So, okay, the two other questions. Do you help them with the choosing the right life insurance policy, or is that something they have to choose for themselves?
No, well, that's for the advisor to do. Now, I'm going to open up that cell, and I'm going to strongly encourage it. Okay, an unfunded trust does no one any good. And if you need a little help with that, I'm more than happy to help you with it. It needs to be done right. We need to have the right ownerships and beneficiary and premium payer. As I told you, most of my time was in litigation. We had a case where it wasn't done right to the tune of $1.2 million. And no one could figure out who the beneficiary should have been. I was brought in on the deal. There's a procedure called interpleading a death benefit. So the insurance company says, we know that we owe the money. We're ready to pay it. We just don't know who to pay it to. So you pay it to the federal court. And then anyone who thinks they have a claim against it, hire an attorney and go to court. And so the prevailing party spent about $400,000 to get $101.2 million. Okay. A good financial advisor could have saved them that. Okay. So I'll walk you through it. I'll keep you out of trouble. Okay.
Yeah. So Courtney, walk through the process. Absolutely. And so the last question is, so how does this work? We find the people that and talk to them and pass them to you to get the trust, and you pass them back to us?
No, I want you all in that interview.
Okay.
Typically, you're going to introduce me to them. You can get me on the phone when you're with them. We can do what's called an email handshake, where you'll send both me and them the same email introducing us to each other. We've had a lot of success with that. And that goes both ways. Okay. We'll do a Zoom. But also when I meet with those parents, I want you all there. I want you to understand the process. And I want you all to be able to talk about funding the trust, because now I'm talking as a parent. We don't have a lot of time. Okay. Don't waste our time. Okay. We're ready to move. So hopefully you're going to know their date of birth and their weight and have some rough idea on their underwriting. Okay. But you need to move this thing along. Okay.
All right. One more question came in. Is this applicable for very wealthy families?
Yeah, it's applicable for wealthy families, definitely. I mean, candidly, we have some of the wealth. Well, it's no secret. Part of the Rockefeller family, like with a big R, is here in Little Rock. Okay. The father was governor of the state, and his son was eventually lieutenant governor. They have a son with Downs. Okay, Paul. And so his widow Lisa Ann is on the board of Easter Seals. We don't deal with a lot of wealthy people because candidly they have other issues, and they most likely are going to go to a high-powered firm with a big tax department, and they're going to understand special needs trust. They may understand, well, they typically don't understand caregiver trust, and it's just not worth us fighting with them over it. Okay, it's really that simple. So Middle America is a big enough market. Okay, nobody's talking to them about much of anything. Mortgage insurance, final expense, whatever.
Mm-hmm.
So again, as Jeremy says, ask the right question. It's a simple question, and most of them say yes, and then it's just a matter of following the process. It's like a golf swing. You want the full swing with the follow through.
Absolutely.
There's my contact information. Happy to work with y'all.
Yeah. One more
It,
question.
Can,
One more
can I
question.
can I ask you,
Go ahead,
yeah.
Jake.
do you have like you're talking about marketing, do you have like a presentation that we could use, or we have to create our own? And where do we like learn more? I feel a little
Okay.
bit awkward getting up and giving a presentation
Well,
at this moment, but I
yeah.
could
Okay.
see myself if I learned more about this that I
Okay.
could.
Okay. If you're talking about group presentations, I prefer to make them, at least initially. Candidly, after you've seen 4, 5, 6 of them, you will have seen everything. Now, if you want to learn more, you have my email address there. Shoot me an email. There's an article I wrote for the Journal of Financial Service Professionals on this market. I'm more than happy to share that with you. Okay.
Okay.
And what you need to master is at this point is just finding these parents and asking them if they're losing sleep at night over it. Okay. You can on my email. There's a link to my calendar. I have a calendar like a lot of others. Just set up an appointment. It's a Zoom appointment, and we'll meet with them. Okay. That article is going to get you up to speed. There's also a parent guide for maintaining Medicaid eligibility. I can send you one of those. It covers a few things we can cover today. Um, we have some videos coming out. I keep on talking about Easter seals. We're waiting for them to get the videos finished up, and it covers everything I've covered today and some more. So that would probably be the best way to learn about it.
How do
Okay.
we get how do we get to those videos that you're talking
They're
about?
not posted yet.
Oh, I see.
They're still producing them.
Yeah.
I see. Okay.
Apparently, it's a lot easier just to sit there and explain stuff and be videoed than it is to get that up
Yeah.
on social media.
Oh, absolutely. It's a process. But again, once we
And,
have those videos, I'm sure you'll let me know and I can get it out to
yeah,
everybody from there.
we'll let you know.
Yeah.
Anything else?
So, yeah, 3 more questions.
Okay.
Do we as agents deliver the trust to the client?
No, no.
Okay.
We don't want you in the practice of law. Okay. And either is your E&O carrier. So it's 2 separate transactions that are close together. There's a legal transaction. There's a limit that I can do without violating not being an attorney, an unauthorized practice of law. And I know where that is, and I've got an attorney to take over from there. And then there's a financial transaction. That's where you guys are going to come in, and I will bridge that for you all. But no, we will handle delivering those trust documents.
Okay. And is this applicable for adult disabled child in a federally run facility?
Yes, and typically most of the folks we deal with are adult children. We have very few under the age of 18. The parents are just not ready. Are you talking about a prison, or what are they when they say a federally?
It just says federally run. Karina, can you expand on that?
Perhaps a mental institution?
That's fine. Most likely that's being paid for by Medicaid, and that's just absolutely, that's not on the fringes. That's right down the middle. And let me make one quick comment. We have not outthought anybody. This is not a wink, wink, nod, nod deal. We have not found a loophole in the law. Everything we do comes straight out of federal law. The problem is parents don't know about it, and we just simply bring them in compliance.
Yeah. So she
Okay?
responded to developmentally challenged facility.
That's fine. Yeah, exactly. Yeah. I assume it's like a permanent residence. Yeah.
Yeah.
But still, the parents want someone when the parents have died to go look in on that child. Okay. And since that institution is going to get all the SSI or Social Security, because the child may eventually become eligible for Social Security while keeping Medicaid, you at least get them some new pajamas, for God's sakes, or something.
Do you recommend this for children under 18 highly, as opposed to try to just explain, give the parents a sense of urgency rather than waiting till they're over 18?
Well, I mean, we're going to talk to anybody. And yeah, there is a sense of urgency for parents under the age of 18 because we don't know how long anybody going to live. 18-year-olds die. I consulted and testified on many that haven't, or many that have, okay, or became disabled themselves. So go ahead and call on, but please understand this: you're competing with other demands on the parent more so than when a child is out of school. You're still trying. You may still be trying to get a complete diagnosis. We did not have one until Mo was 18. Okay, you're trying to get them educated, which can be exceptionally difficult. In some cases, spawns litigation of its own. You're trying to find services and you're trying to find what benefits they are. So you're competing for the parent's time. I talked to them. We will do some, but gosh, it's a long process for the most part.
All right, 2 more questions and we'll wrap it up.
Okay.
Will a pre-need funeral policy that is already in a trust be good with this program?
Yes.
Okay. And has it been challenging for parents to get approved for life insurance in some cases?
The parents quite often are on something for anxiety. Some companies are far better about that than others. Okay. But it really has not been an overwhelming problem. I mean, not really. They're going to be on something for anxiety though, possibly.
Yeah. All right.
It's
Well,
just
one more question.
Also,
Sorry.
just one more.
This is
Two.
the last
two
one.
more.
2
Well,
more?
there's
All right.
my phone number if someone has to call when this thing's over.
Absolutely.
I'll be available.
Yeah.
Okay.
So if a child outlives the parents
Yeah.
can move the trust into another account, such as an IUL, annuity, or Roth.
Can you? No. The you want that IUL to pay a death benefit into the trust. Okay. I mean, maybe I don't understand the question, but the
It's
trust
more if
holds
the
the
child passes away, though. If the child passes away and they're the ones who
Oh,
have the trust, and then so then now the parents are left with the trust. Are they able to convert that trust into an account that's just
oh
for
yeah,
like
yeah, yeah. The trust
without
is
an
going to
issue,
distribute at the child's death. The trust distributes back to the parents or
without
their
triggering
estate.
any withdrawal or like possible taxes placed on
No,
them?
no. The trust, irrevocable trusts are very insensitive to taxes. I mean, you're going to pay taxes forever with an irrevocable trust. When you shut that thing down, you're just going to distribute. You could create maybe a capital gain in some situations, but for the most part, you're not.
Yeah.
For the
That's
most part, it's going to be a life insurance contract, okay, or an annuity, but most likely a life insurance contract. So and if the parents have any sense at all, they're going to hang on to that like it's the family jewel because they don't need it to take care of their child, but it's accumulating cash value. You got the expenses out of it. If it's a UL or IUL, you may want to fund it up to the MEC limit and then turn it into some type of income stream at some point. So yeah. Does that answer your question?
there's lots of different things we can do at that point. That's a whole other class in of itself. So we'll definitely get to that. And Jake, you had one more question?
Yeah, I was just curious. Like you said, most of the time it's the life insurance because basically, so these are parents who are concerned about what's going to happen to their child when they die.
Mm-hmm.
So basically, they would, if they don't have sufficient assets, they would get a life insurance policy. What if they? I guess there's 2 questions here. What if they have a lot of assets? And B, what if where do where do annuities generally fit in? You said this is for life insurance or annuities or something. So where do annuities generally fit into this picture?
Well, the nice thing about annuities inside of a trust and a special needs trust, it's the tax deferred portion of it, and you can try to time withdrawals against the taxes, an expense you're going to pay, and then and take a deduction. You can have families with some. I have one now with a $3 million estate. It is a lot of money, but the problem is we don't know what's going to be left of that if either or both of those parents need long-term care. There is one family, I mean, it was again from litigation. The son was in the Boy Scouts. At night, he was running around the tent playing truth or dare. He ran off a cliff, fell 40 feet down on the ground, had a massive head injury, frontal lobe. We took the settlement and put into special needs trust. But both parents, the parents together, have a very nice estate. Unfortunately, both of them are now in nursing homes for dementia and Alzheimer's. So $2 million is not what it used to be. I mean, I'm not going to turn it down if you offer it to me, but fund the trust, and it doesn't matter what happens to the parent. As long as you got the trust funded with the life insurance, there's going to be a death benefit there to take care of that child. And if they have that much money, instead of doing a GUL, I would probably use something like an IUL or something. So you can then at some point start inside that trust taking the loans, and because of the parents get older, pay for caregivers. Okay.
So when do you use annuities?
We use annuities to capture dormant or orphaned 401k accounts and to do Roth conversions. And any other place you would use an annuity. Okay. It is a great alternative for the fixed portion of an investment portfolio. I think it was Ernst & Young just issued a research paper on it that says it minimizes the risk, the fluctuation, and enhances the return. I mean, so it's legitimate inside of a portfolio.
I know that. I'm just wondering, how do they fit into the special needs picture? That's kind of my question.
It's just creating an asset base. It's creating the funding of the trust.
Yeah, but what about taxes?
But when would you fund with a life insurance versus when would you fund with an annuity? I guess that's my question.
We fund with a life insurance because that's the way we create a large estate, a big bang. It gives the biggest bang for the buck typically to get that trust funded. Okay. The annuity is because there's some asset out there already. It just makes sense to put it into annuity.
So how old are the typical people that we'd be working with?
You're probably going to have parents at least in their mid 40s, up into their 70s.
I see. Okay.
Not
So
a
when
lot
they're
in their
that-
20s or 30s.
And
When they're in that
families,
younger age group, then life insurance really works well.
I got news for you. We're getting life insurance on older parents.
Okay.
Absolutely.
Joseph, did you have a question?
Yeah, I had some questions. Sorry, I came late. I live in Hawaii, yeah, and the cost of living is expensive, and there are
Staggering.
parts in the US that are like us too. And unless the parents are in the union or government, they don't make very much here. And how do we help them? That's where where I was thinking term, but you were saying to stay away from term,
Well, we got to have the coverage in force of the parent's death. And while
right?
there is a potential they could die younger, just statistically, they're going to die later. Okay? And that's why you want something permanent, like a GUL. The reality is this, Joseph, having that trust funded to some extent is far better than not having it funded at all. Life
Right.
is not perfect. We're not
Okay.
offering perfect solutions.
No.
I can tell you there is no perfect financial instrument out there. When someone says it, that's a red flag, having dealt with a lot of litigation. Okay.
Okay.
This trust is not perfect, but it's the only legal alternative. Going back, if I could chat with the Senate Finance Committee, there are a lot of other things I wish we could do, but we can.
Yeah.
There were trade-offs. Okay. Particularly that 5-year look back, and particularly with these, if the person that the parent doesn't set up a trust, we have to do a first party trust, and that does have a lean in favor of the state. Love not to have to deal with that, but that was a trade-off.
Yeah.
It was political.
Okay. Hey, other question I had was, how do we get involved with you? Are there any costs for us to
No,
join this?
no. We don't charge and we don't split commissions. You keep your commission. We're paid when the parent purchases the trust. We charge $750. Covers all 4 trusts. All you have to do is give me a call, send me an email, send me a text, smoke signal, whatever. Let me know you got a parent. Give me a little information. Set up a meeting where we can all get together, and we'll work on it that way.
So for us,
Why
would
do
be
you
more
need
of a
4
Zoom meeting.
Yeah, we do a lot of Zoom meetings.
Why are 4 trusts needed?
What?
Why do we need 4 trusts?
You need 4 trusts because there's some things we cannot pay out of a special needs trust. For instance, for the caregiver and their family. Okay. Sometimes someone will be disabled but not on Medicaid, so we don't want to operate out of a special needs trust. It's inappropriate. It makes it become horribly cumbersome. So we need a spendthrift trust. We use that legacy trust. Actually, that's the one that gets funded, typically at death, and we hold the money there so we maintain the flexibility to fund those other trusts. Because let's say they are on benefits, so we're going to use the special needs trust and the caregiver trust. The extent we fund that caregiver trust is going to fluctuate a tremendous amount. Okay, there'll be years we don't fund it at all. There is no way in the world anyone knows today how to allocate an estate between those trusts. So we leave everything in that green legacy trust. It then can respond. If you're a football fan, you're familiar with an option play. This is the option play.
Yep.
The thing that determines what the quarterback does is what the defense does. The thing that determines what the trustee of the legacy trust does is what life throws at it.
Yeah. And again,
what do we got to take care of?
For $750, you're getting all 4 trusts done. It's not, it doesn't matter how many, if it could be 10 trusts, if it's still the same $700, $800, who cares? As long as it's doing what it's prescribed to do for the child.
This is all 50 states?
It's good in all 50 states. Oh, one other thing. You had 750. There are no add-ons except in one situation. If someone has a military retirement by federal law, we have to do a first-party trust. We charge $250 for that first-party trust. If someone has more than one child, which we have run into, we don't charge $750 for each set. We charge $250 for the second set. I don't know when we cut it. At some point, we cut it off because we had a family that had 4 or 5 kids. Okay, they're families that adopt kids with special needs.
Yeah,
a lot of this is still parent to parent, and we've got to keep this thing affordable for Middle America. So
absolutely,
that's it.
All right, now with the term sale, we talked about term a lot. If we end up using term, can we convert it later on in the policy? Or
sure.
Trust?
Yeah. If you're going to do term, please have a conversion feature.
Yeah, perfect. All right, Harry, thank you so much for coming out today. I know we took a little bit longer than an hour, and I'm
fine.
I'm so thankful you came on and talked about this. The guys, awesome conversation. There's videos gonna be up on the site tomorrow. And again, take Harry's number down, set up time to talk to him, give him a call. Harry, again, thank you so much for doing this. I look forward to working with you on some cases I have. So I'll be in touch in the next few weeks. And like Courtney says, you're doing God's work. So keep it up. All right.
Have a good afternoon.
Everyone have a great day. If you have any questions, give me a call.
Okay.
Thanks much.
Thanks
Great. Thank you very much.
Thank you.
you.
We'll see.